Hello everyone, hope you all are good and I hope that you have been watching all the video lectures thoroughly, and today is the 14th lecture for this subject and the 6th lecture for chapter 2. That means it is the 6th lecture since we have started chapter 2. All the previous lectures are of chapter 1. Yes. So overall 14th lecture, and with regard to chapter 2, this is the 6th lecture. Alright, let us quickly revise what we have done in the previous lecture, that is the 5th lecture. Exactly previous to this, we have understood about types of accounts. Yes, and if you remember, there are 3 types of accounts: personal, real and nominal. Types of account. First one is personal account, then it is real account, nominal, okay. Then we have also understood about its rules. Yes, mainly the types of accounts, 3 types: personal, real, nominal. Then rules of debit credit for the same. For personal it is debit the receiver, credit the giver. Then for real accounts, where the accounts of goods and assets are included. Yes, and the rule for real accounts is debit what comes in, credit what goes out. Finally, talking about nominal accounts, debit expenses and loss, credit incomes and gain. Alright, what is included in personal accounts? It is natural person, and legal artificial person. What is included in real accounts? Goods and assets. What is included in nominal accounts? All the expenses and incomes. Yes? Okay. So types of accounts we have understood in the previous lecture. There are 3 types: personal, real and nominal. The rules for the same of debit and credit: debit the receiver, credit the giver. Debit what comes in, credit what goes out for real account. Debit all expenses and loss, credit all incomes and gains in case of nominal account. Yes, I have also given a particular example for each account with rules applied on the same in the previous lecture. Yes, so here we complete the revision of the previous lectures, and as I said that we are going to continue, we are going to start with a new illustration. So the new illustration to be started is illustration 11. If you are having a new textbook, it might happen that the number of illustration that I dictate and the number of illustration that appears in your books might differ. Yes. So for that, to avoid that confusion, I will read the question. On the basis of same, you can find it out in your textbook. Yes, I repeat that I am going to start with a new illustration, but if I will mention the number of illustration, it will create confusions, because there are also old books and the new books with the GST chapter updated. So to avoid this confusion, I will be reading the question instead. It is a long illustration, nearby 10 or 11. I said that we are going to start with illustration 6, but illustration 6 is comparatively quite small, so you can do on your own. For now, let us begin with illustration 10 or 11. You just decide once I dictate the question. Okay, I am reading the question. I hope you have a textbook with you. To which account the following transactions will be debited and credited in the books of Amrut? Amrut is the owner. Find out the question on the basis of same in my book. It is illustration 11. Check in your book. Yes. So hope by now you have obtained it. So let us begin. What we are supposed to do actually in the given question is that so far whatever we have understood, that is the types of transactions, it is cash, credit, other, then non-economic transactions we have understood. Thereafter we have understood how to recognize cash or credit transaction, how to recognize whether the transaction is economic or is non-economic. Yes. Further we have understood about finding out the dual effects of the transaction. Then we are supposed to classify the same, that this account is of this type, that whether it is personal, real or nominal. On the basis of that, we are going to now find it out that which account will be debited and which account will be credited on the basis of the rules that I have mentioned here. Alright. Okay. So you should be aware of this topic for the illustration that we are going to start now. And if not, then please learn it well, and only then you will be able to understand this illustration, right? Okay, I will repeat this for the last time. There are three types of accounts: personal, real and nominal. What is included in personal accounts? It is natural person and legal artificial person. Then what is included in real accounts? It is accounts of all the goods and assets. In nominal accounts, all the accounts of expenses and loss are included. Yes. Now what are its rules? This is the rule for personal accounts, then is for real accounts, for nominal accounts. Yes. This much concept should be clear in your mind before you proceed with this illustration. Okay. Alright then. I repeat the question. To which account the following transactions will be debited and credited in the books of Amrut? Describe. So what we are going to, what we are supposed to do actually, I will read the transaction, will write down the two effects, okay, then will mention its type, then will mention whether it will be debited or credited. Why it will be debited and why it is going to be credited, that I will explain, but I won't write. The explanation is given in the textbook. Yes. If you will see the very next page, there is a table. It says transaction, then debit effect, then credit effect, and inside each column there are 3 columns again, and that we are not going to do. Okay, we will just make it simple so that it is understood properly. Alright. And now the main thing, while understanding this, I will also explain you the concept of journal. Journal is chapter 4 as per new textbook and it is chapter 3 as per old textbook. But there is a chapter called journal in both the books, and which is most important chapter of all. Yes, and journal entries are written on the basis of these transactions. Everything that you have understood till date all together is to be applied in the chapter of journal. Yes, okay, then let us begin. There is a transaction, the very first transaction: commenced business with introduction of capital rupees 40,000. This simply means that the business has been started with the capital of rupees, how much? It is 40,000, I think. Yes, the capital, I mean the business has been started with the introduction of capital of rupees 40,000. So what we are going to do, how we are going to understand this, let me explain that. Yes, the first transaction, you have read the transaction. Commenced business with the introduction of capital rupees 40,000. Okay, think what comes in the business? Cash. The first effect, cash account. Who brought cash? Owner. Whatever is brought by owner in the business is investment and is capital. Yes. So this is the first effect and this is the second effect. Yes. Cash is the first effect, capital is the second effect. I think we have understood how to find out the two effects of a transaction. Yes, just give me a minute. Okay, let us continue. We have understood how to obtain the two effects of a transaction. I'll repeat this transaction. Commenced business with introduction of capital rupees 40,000. What comes in the business? Rupees 40,000. So cash account 40,000. Who brought it? The owner. Capital account. Anything that the owner brings is capital. It can be cash or it can be in the form of an asset. Yes. So these are the two effects for this transaction. Further, what we have learned, to mention the type. These are the effects. Here is the type of account and here whether it is going to be debited or credited. Cash account. What is cash? Cash is an asset. Asset is a part of real account. Yes. So cash is real account. Yes. What is the rule for real account? Debit what comes in, credit what goes out. Cash comes in the business or goes out of the business? Definitely it comes in the business. So debit what comes in and cash account is having debit effect. Right? Sorry, all right. So cash account will be debited. Yes. Hope you are able to understand. Next, capital account. Who bought capital? Who invested capital? Owner. Owner is a natural person. Capital account therefore is personal account. What is the rule of personal account? Debit the receiver, credit the giver. Owner is the giver or is receiver? Is giver. Owner brings. Yes. Owner is the giver of rupees 40,000. Yes. So, as per the rules of debit and credit for personal account, capital account will be credited. Right? Okay. So, this is what we are going to do in the entire sum. Yes, this is how we are going to solve this sum. No doubt, The explanation is little bit different in your textbook, but if you will read that, you will be able to understand. Yes, it has just been categorized that this is the transaction for asset, this is the transaction for service, this is the transaction of income and expense, etc., etc. All right. Okay. So, the answer that you are going to consider is the part of explanation that is given to you in the textbook. For first transaction, it is cash comes in business, cash account, debit, for which I have already explained the reason. Cash is real account, debit what comes in, and cash comes in the business, and hence cash has been debited. Owner is the giver. Credit the giver as per the rules of personal accounts. Okay. So, let us see which is the next transaction. Okay. Second transaction, loan obtained of rupees 60,000 from Ramnik. Loan has been taken from Ramnik of rupees 60,000. Yes, which are the two effects for this? Firstly, what comes in? Cash. Yes, because you have taken loan. Cash account. Yes, and loan is a liability. From whom you have taken loan? Ramnik. So, Ramnik's loan account. Yes, the two effects of this transaction. Yes, the first is cash account, second is Ramnik's loan account, because the loan has been taken from Ramnik. Cash, why cash account has been written here? Yes, because cash has, cash comes in because loan has been taken. Yes, you have borrowed money. Yeah, so cash comes in your business, and it is loan. Loan is a liability. Let us mention the type. Cash, you know very well, it is real account. Ramnik's loan account is personal account. Why? Because Ramnik is a natural person. Yes? Okay. So, cash, real account. What is the rule for real account? Debit what comes in, credit what goes out. Here, consider yourself that you are the owner and you have taken loan from Ramnik. So, what comes in the business? Cash. So, cash comes in, debit what comes in. So, with this reason, this will be debited. Cash account, debit effect. Why? Cash comes in. Yes? And Ramnik's loan account. Personal account, why? Because first of all, Ramnik is a natural person. Yes? Personal account, the rule for personal account, debit the receiver, credit the giver. Ramnik is giver or is receiver? Obviously, Ramnik is giver. Yeah? So, credit the giver. So, Ramnik's loan account will be having credit effect. Let us read the explanation that is given. Okay. Cash comes in business, cash account, debit. Ramnik is giver, Ramnik account, credit. You can also write Ramnik account here instead of writing Ramnik's loan account. Okay? Fine then. The third transaction. Okay. Rupees 20,000 deposited with Union Bank and opened account. You have deposited rupees 20,000 with Union Bank. So, who is the receiver? bank. What is deposited in bank? Cash. Yes. So the two effects first of all for this transaction. The first effect is bank account. You can also write union bank account, but it is also a bank, and cash account. The two effects for this transaction, I repeat, just because cash has been deposited in bank, there is an effect bank account. What is deposited? Cash. Cash account is the second effect. Bank. What is the type of bank account? Personal. Bank is the receiver or is giver? Of course, we are depositing cash in bank. Yes, so bank is the receiver and hence bank account will have debit effect. Yes, cash comes in the business or goes out? Cash comes in. Yes, sorry, goes out. My mistake. Cash goes out. Firstly, what is cash account? Cash account is real account. Cash comes in or goes out? It goes out. Goes where? To the bank. Yes. So credit what goes out. Yes, as per the rules of accounts, cash account, real account, the rule for real account, debit what comes in, credit what goes out, and cash goes out, and hence cash account will have credit effect. Let us read the explanation. Bank has received cash, so bank account is debited. Cash goes out from business, hence cash account is credited. Yes, so sorry. Bank has received cash. I repeat, the explanation that I read was for something else by mistake. I repeat the explanation for this in your textbook. Third transaction. Bank has received cash, so bank account debit. Cash goes out from business, so cash account credit. Yes, I will repeat this transaction. You have deposited some amount with bank and you have opened an account. You have deposited amount with Union Bank and you have opened an account. So bank account is the first effect. Cash account is the second effect. Yes, bank personal account, debit the receiver, cash real account, credit what goes out. And always within the, in two effects, one is the debit effect and another one is always a credit effect. Alright. So, fourth transaction. Brokerage received of rupees 4,000. Yes. Brokerage received of rupees 4,000. What did you receive? You received brokerage. Now this is a cash transaction, and as per the rules, in the cash transaction, out of two effects, one is always of cash. So I will write down the two effects for this. First of all, cash account, brokerage account. Yes, brokerage is received. The word received indicates the transaction to be cash transaction, and in case of cash transaction, out of the two effects, one effect is always for cash account. Second effect is of brokerage, because brokerage has been received in cash. Okay, so cash, again a real account. What is the rule for real account? Debit what comes in, credit what goes out. Here brokerage is received, so cash comes in, debit what comes in. Yes, so cash account will be having a debit effect. Alright. Then brokerage. Brokerage is received, so this is an income. Income is always nominal account. Now the only question is, what is the rule for nominal account? Debit all expenses and credit all incomes. Yes. So, as per the rule of nominal account, brokerage is an income and hence it will be having a credit effect. Alright. So, let us read the explanation given in your textbook. I am reading the explanation part and not that tabular form having 3, 4 or many columns, not the answer. Yes. Okay. So, what is received? Fourth transaction, it says brokerage is received, and in the explanation by mistake it is written commission. So, you just consider it as brokerage. Yes, in my textbook it is printed in such manner. So, yes, cash comes in business, cash account debit, and brokerage is an income, or if it is commission in your textbook, then commission is also income. So, commission account or brokerage account credit. This might be the printing error. Instead of brokerage they have written commission, right? Okay. So, then fifth transaction, goods of rupees 10,000 purchased on credit from Bachu Bhai. Okay. Let us find out the two effects for this first of all. Goods have been purchased on credit from Bachu Bhai. In credit transaction, always out of the two effects, one effect is always for the, it is the name of the person or the party from whom we have purchased goods. Yes, name of the, account of the person. Yes, okay. So, transaction says that you have purchased goods from Bachu Bhai. Yes, what did you purchase? You purchased goods. So, the very first effect in this case is purchase account. What did you purchase? You purchased goods. Goods is a part of real account. Rule, debit what comes in? You have purchased goods. So, goods comes in debit. Purchase account will be debited because goods comes in, and as per the rule of real account, debit what comes in. Okay, fine. Then second effect for this, from whom did you purchase? You purchased from Bachu Bhai. Just because this is a credit transaction, cash account does not appear anywhere. Bachu Bhai is a natural person. So, personal account, the rule, debit the receiver, credit the giver. Who is the giver? Bachu Bhai. Yes, is a giver of goods. You have purchased goods from Bachu Bhai. So, Bachu Bhai is giver and also your creditor. Yes, okay. So, credit the giver. Now, let us read the explanation. Okay, purchase made, goods comes in, so purchase account debit, not through cash. Bachu Bhai is giver and hence Bachu Bhai account credit. Okay, so I hope you are able to understand it now, how to find out the two effects, mention its types. Why do you mention its types? So that you can apply a proper rule. And on the basis of application of rules of debit and credit, you will find it out that whether this account is to be debited or this account is to be credited. Alright. Okay then. The next transaction. Okay. Sixth one. Goods of rupees 20,000 sold on credit to Lakshmi. You have sold goods of rupees 20,000 on credit to Lakshmi. If we are talking about an amount here, yes, then amount remains same. The amount debited is always equal to the amount credited, and that's the reason that I am not talking about amount since transaction 1. Yes, but if you will read your answer in the textbook, you will understand. Okay, but all you are supposed to do is you just have to understand what I am explaining. You got nothing to do how is the answer presented in your textbook and how it is explained. Yes, it's all same. Just the way of presentation might be slightly different. Yes, but you are supposed to consider the part of explanation that is given on the next page of answer. Okay, so please do not get confused. Follow the lecture and make clear understanding in your mind. So we were talking about 6th transaction. Goods of rupees 20,000 sold on credit to Lakshmi. You have sold goods. You have sold goods to whom? To Lakshmi. So Lakshmi account, the first effect. Second effect, of course, sales account. So Lakshmi account and sales account. Lakshmi is a natural person and hence personal account. Sales, this is sale of goods. Goods is a part of real account. So sales account is real account. Now the rule for personal account, debit the receiver, credit the giver. Lakshmi is receiver because we are selling goods to Lakshmi. So Lakshmi is the receiver of goods. So Lakshmi account will have debit effect. Yes, and sales account, real account. What is the rule for real accounts? Debit what comes in, credit what goes out. Goods we have sold. So credit what goes out, goods goes out, and hence sales account will have credit effect in this manner. Yes? Okay. I am not reading the explanation now, you can read it on your own. Okay, the next transaction says shop rent paid rupees 5,000. Shop rent paid rupees 5,000. Yes, the word paid in the transaction indicates that the transaction is cash transaction. And in case of cash transaction, out of the two effects, one is always for cash. Okay. So, what did you pay? You paid rent. Yes. So, rent account and cash account. You have paid rent, that means this is your expense and all the expenses and incomes are in nominal accounts. And as per the rule of nominal account, all the expenses are to be debited. Debit all expenses and losses, credit all incomes and gains. Rent is paid by you and hence this is an expense, and as per the rule of nominal account, rent account is to be debited and you have paid it in cash, of course. Cash, real account. Debit what comes in, credit what goes out. Cash goes out and hence cash account will have credit effect. Okay, fine then. Let us continue. The 8th transaction, rupees 200 paid to Ramakant for carriage. Rupees 200 paid to Ramakant for carriage. The word paid indicates cash transaction. So out of the two effects, one is obviously of cash. And what did you pay in cash? You have paid carriage. No doubt you have paid to Ramakant. You might be thinking that the name of the person is mentioned and this is credit transaction. No. Also the word paid is mentioned. Sorry. Yes. So this is cash transaction. So you have paid 200 for carriage. So first of all, the effect, carriage. First effect, you know very well what is carriage. and you've paid in cash. I've explained this in first chapter, the meaning for this word. Okay, this is my expense, hence this is nominal account, and as per the rules of nominal accounts, all the expenses are to be debited. Yes, and then there is cash account, which is real account, and cash goes out, and hence cash account is credited. Yes, you have paid carriage, so obviously cash goes out. Then rupees 500 becomes receivable for interest from Kundan. I repeat, rupees 500 becomes receivable for interest from Kundan. Understand the transaction first, that what actually they are trying to say. Becomes receivable मतलब आपको उनसे लेना है. For what? For interest. Yes. So the two effects for this. Yes, this is transaction number 9. And Kundan is a person who is supposed to pay an amount for interest. To whom? To you. You are the owner. You are Amrut, if I am not wrong. Yes, Amrut is the owner, and I have said that whenever you are solving any sort of sum or whenever you study this subject, consider yourself as the owner of the business. So it's you. You are supposed to receive an amount of interest from Kundan. So Kundan is your debtor. Right now that amount is with Kundan. Kundan is supposed to pay, has not paid yet. So Kundan becomes your debtor this way. So Kundan's account will be debited. Why? Because Kundan is the receiver of benefit. Why he is supposed to pay interest? Obviously he might have taken some amount as a loan from me, or it can be an interest for anything that I have given or you have given, Amrut has given. Yes, so debtor is always debited, and this way debtor is always debited, creditor is always credited. Kundan here is my debtor, is supposed to pay the amount of interest. That means I am supposed to receive. Other than this, Kundan is the receiver of benefit right now. Yes, and that is why Kundan's account will have debit effect. And interest is an income. Yes, Kundan is the receiver of benefit, and interest that we are supposed to receive from Kundan is income for us, that Kundan is going to give. So Kundan account and interest. Interest is to be received. Nominal account Kundan personal account. Kundan is the receiver of benefit, and hence Kundan account will have debit effect. Interest is a nominal account and is an income because we are going to receive it. So interest account will be having a credit effect. Alright. Okay. So then the next journal entry, next transaction. Salary paid to Dinesh rupees 1200. I repeat, salary paid to Dinesh rupees 1200. You are the owner of the business. Who will pay salary? Obviously you. Yes. So salary is an expense once you pay. Firstly, this is a cash transaction. So out of two effects, one effect obviously is going to be for cash. And what have you paid? You have paid salary. Salary is an expense. So let me write down. Okay. Salary account, and you have paid in cash. Salary is an expense, hence nominal account. As per the rule of nominal account, all the expenses are to be debited and hence salary account is having debit effect. Yes? Okay. Cash account. Cash account is real account. Cash, real account, credit what goes out. Because you have paid salary, obviously you have paid in cash. So cash goes out, cash account having credit effect. Yes? Okay then. The next transaction. Commission received rupees 3000. What have you received? You have received commission of rupees 3000. Let us write down the effects for this. Commission received. Just because this is the cash transaction, out of two effects, one is going to be cash account. And what have you received? You have received commission. Okay, let us mention its types. Hope you are clear with the effects first. Yes, cash account and commission account. Now you have received commission. Yes, so obviously this is your income and all the incomes are in nominal accounts. Cash, real account. You have received commission. So cash comes in or goes out? Comes in. Just a second. Yes. So debit what comes in? Cash will be having debit effect. Commission is an income and as per the rule of nominal account, all the incomes are to be credited. So commission account will be having credit effect. Alright? Okay. Then goods of rupees 15,000 purchased on cash. Okay, so this is a cash transaction first of all. So again, out of the two effects, one is obviously for cash and what have you purchased? You have purchased goods. So whenever you purchase goods, the first effect is purchase account. Purchase account, you have purchased it for cash, so cash account. Purchase of what? Of goods. Goods are a part of real account. Cash again real account. Debit what comes in, credit what goes out. Goods comes in, so purchase account, debit. Purchase account will have debit effect. Cash account, real account. So cash goes out, credit what goes out, and this way cash account will have credit effect. Alright? Okay. So next transaction, the 13th one, goods of rupees 20,000 sold on cash. Again, this is cash transaction. So out of the two effects, one is obviously going to be of cash and another one, hope you can guess now, obviously for sales. So I'll write down the two effects. Cash account, sales account. Yes, cash, real account, sale of what? Goods, real account again. So what is the rule of real accounts? Debit what comes in, credit what goes out. Yes, cash comes in, so cash account will have debit effect. Sales, goods goes out, credit what goes out. So sales account will have credit effect, cash account will have debit effect. Yes? Okay. So I repeat, cash here comes in. Obviously if you are selling something for cash, cash comes in. Yes, you are not selling it for free. So cash account will have debit effect because cash comes in as per the rule of real account. And sales, goods goes out. Once you sell something, yes, that means something is goods always, yes, if you are involved in a business activity. So goods goes out as per the rule of real account, credit what goes out. So simply cash account will have debit effect, sales account will have credit effect. Alright. Okay then, I think the transactions which are given ahead, you will be able to solve them on your own. But before that, please revise all the illustrations that we have done so far. Yes. So I think there is nothing new in chapter 2, and the sums which are given in exercise, that is question 4 and question 5, in that you are supposed to mention which accounts will be debited and which accounts will be credited. The same thing that we have learned, you can mention the way I have taught you. You can also write it the way it is given in your textbook, anything, but in short the answer should be correct. Which account you are going to debit, which account you are going to credit, you should clearly mention that. Yes. And question 4 and question 5 in exercise, you will be able to solve them on the basis of the explanation that has been given to you in this lecture. Yes. So overall in this chapter we have learned about the transaction, the types of transactions, economic, non-economic, then types of economic transactions, then the identification of cash transaction and credit transaction. Further, we have understood the dual effects of transactions, that is the two effects of every transaction. Yes, and thereafter we have understood the types of accounts. Yes, personal, impersonal, impersonal, real, nominal, real goods account, assets account, nominal, expenses, incomes, personal, natural person, and legal, artificial person. Thereafter we have understood about the rules of debit and credit, the most important topic in accountancy, the rules of debit and credit. The entire accounting subject depends upon this. The rules of debit and credit for personal account, real account, and nominal account. And finally, on the basis of this, we have learned to identify the debit and credit effects of the accounts. Yes, that means you have learned to mention that which account will be debited and which account will be credited. That is the illustration that we have done today, and the remaining transactions you will please practice on your own, and on the basis of same you are going to solve sum number 4 and 5 in your exercise. So that's all. Here we complete chapter 2 in this lecture, and from next lecture onwards we are going to start with a fresh new chapter that I will mention in that lecture itself. Yes. So till then, stay home, stay safe, and study well.